Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel. And today we have an amazing guest in Mr. Craig Napoliello. Before we dive in, I wanted to ask you a real quick favor. Would you mind taking an extra 30 seconds and heading over to iTunes to rate this podcast with 5 stars? This helps us get more listeners, and it means the absolute world to me. So thanks for making my day with that review of the show. All right, let's dive in. Craig spent the majority of his career as a fixed income trader and now works at a fintech firm. After being interested in real estate for much of his adult life and dabbling in single-family home investments, he began his multifamily journey in the beginning of 2019. When he's not at his W-2 job, Craig loves to learn new ways to build generational wealth through mobile home parks and other real estate. Craig, we're excited to welcome you to the show.
Thanks for having me.
Yeah, maybe you can start out by telling our listeners your story and how you ultimately got into the wonderful world of manufactured housing.
Yeah, so I'll keep this story around sort of the real estate piece of it, but I've always been interested in real estate and not even sort of actively thinking about it. But when I look back on sort of my adult life, and I would go to a city and go online and look up for single family real estate and what things were renting for, what they were worth, and all this type of thing. So the sort of the natural interest was always there. I would say that I started, then in 2019, my sister-in-law introduced me to Bigger Pockets. And so I started going down sort of the rabbit hole. And I think that sort of the big shift in mindset then was was real estate as a business, right? Versus real estate as like a hobby. So, started teaching myself, I did, listen to Bigger Pockets, started listening to podcasts, like yours that, it's amazing how many sort of free resources there are out there in the world. You can make yourself dangerous in a few months of really, diving deep into some of these podcasts. So I did that, and I purchased my first duplex that year. And again, sort of like this whole shifted mindset around sort of how do I make this a business? How do I structure a team? Like, how am I doing things that can become scalable? So I bought a duplex that year, and then I went from a duplex, and then I bought a 21 unit, a 10 unit, and a 22 unit, all in all multifamily in New Hampshire. And what happened there was I got myself in the arena, and I started thinking about where can this go? Like, what can this mean for me? And just sort of looking at this in it much more from the bigger picture standpoint. And that's when, around the time it's sort of, COVID hit. I live in New York City. So, things here were very much, sort of locked down. So now all of a sudden my wife and I were, spending a lot of time at home and have a lot more time on my hands. And I wanted to use that in a positive way. And I spent a lot of my extra time, honestly, like, teaching myself about mobile home parks. So I was, which I think probably many folks do, is that, I really have a genuine interest in real estate. Now, I think that manufactured housing is the best vehicle for investment, right? For a long-term investment. But I do have a genuine interest, sort of across the board in real estate. So I was, researching different types of real estate. I came across manufactured housing, as I'm sure you're probably in the same boat, right? There was a lot of characteristics about manufactured housing that I liked more than multifamily. And so I said, wait a second, I'm in all these, multifamily projects that I've learned a ton from. I've made a ton of mistakes, but I've added enough value that I have a bunch of equity in these properties in a short amount of time. And, if I think that manufactured housing is a better vehicle for my investments, why am I not doing that? Right. So I joined a mentorship program. I was listening to podcasts, like yours and teaching myself about manufactured housing. And then I started, sort of making action steps and following those. So this is all like during COVID. I, sort of like sitting early in my house with my wife, trying to, formulate a game plan for how I could, go from my multifamily into manufactured housing. And, literally like what got me into the game in manufactured housing was it was the only time I got on a plane for like, I don't know, an 18-month period. And I'm a person that, travels. My wife and I travel all the time. The only time I got on a plane for like an 18-month period was me going down to North Carolina to meet with the owner of the portfolio that we ended up buying. And I remember at the time I had 0 pads. And, I remember saying my wife and I had like canceled like several trips and whatnot. And I was, I said, listen, I'm going to go down to North Carolina. I'm going to meet this gentleman I've been speaking to. And she was like, are you like, basically, are you serious? Not to like not be supportive, but like, sort of like, is this like a huge waste of your time? Like, this is like, you're going to go down there, you don't know this guy. And this sort of seems like a little bit of a wild goose chase. And obviously now very grateful that, both of us are very grateful that, I made the trip. So that's sort of what vaulted me into manufactured housing. I was able to, build a rapport. I think the guy, was, really respected the fact that I came down there to meet him. And, I was coming in from New York and, spent time with him and got to know him and built a rapport with him. And that made all the difference in us ending up, sort of partnering and him transitioning these assets to me. So that was the beginning of it. And then sort of went from there.
Wow. That is so awesome. I love that. So tell me, you started with the multifamily units. Were you raising money for those deals, or was that just your personal money?
That was all, so that was when I say that was my personal money. I had a buddy that saw what I was doing, and, so a guy that I've known for 20 years. And he actively said, hey, listen, I'd love to like sort of come along for the ride, just, sort of like learn about this. So some of those products were on my own, and some of them I split 50-50 with this, like, good friend of mine. And then,
Awesome.
and then basically all the like our current business, which was, when I say I would classify it much differently, all the multifamily in New Hampshire, that was sort of my first step into professionalizing an operation. I had a property manager sort of handling everything in New Hampshire. This business now, the manufactured housing business, we're vertically integrated. So again, which is a much different, undertaking, I'll have to tell you. But so this business looks a ton different than my sort of previous multifamily business. This business, I went into it with a certain expectation of like, okay, great. I'm going into a new asset class. I sort of have a certain bite size that I'm comfortable with. And I came across an opportunity that was like multiples larger than what I was, comfortable with. And I thought to myself, one, I was, pretty scared at the notion, but luckily I sort of had the wherewithal to sort of take a step back, take a deep breath and say, if I, pretty much any single thing that you buy in your life that goes the right direction, you wish it was bigger. You wish it was as big as possible. Right. So
Sure.
I sort of thought to myself, okay, well, I get it. This is not sort of like this is not how I drew it up, but if I should be evaluating the quality of the opportunity. If the opportunity is there, I should be doing everything in my power to bridge the gap financially. So, I put up the majority of the money. My wife and I, our wife and I, our personal money. We put up the majority of the money for the mobile home park business. And then I have a few friends of mine. I didn't raise any money. I didn't send them on a spreadsheet. A few friends of mine that said to me, hey, listen, like, I sort of see what you're doing here. Like, I'd love to be involved. And so I went to those people and said, hey, listen, you had brought this up to me previously. So, here's an opportunity, no pressure, but like, I'm coming to you because you came to me. So if you want to basically put money in, I have a full-time job. I've never owned a mobile home park. I, don't have any like fancy like pro formas for you, blah, blah, like pretty much like all these qualifiers of like why you should feel totally comfortable just passing on this. I've never, managed parks before. We're inheriting a team that's like, that's, lackluster at best. So we have to build out a whole team, blah, blah, blah. There's a whole laundry list of reasons why it could have been, why it could have failed and why someone should, turn their backs on this. And, pretty much all of them were like, I'm in. So that bridged the gap financially. And these are all people I've known.
And that was for the North Carolina portfolio, right? And how many pads is that?
So we're over 500 pads now. The first batch, that first portfolio was 270 pads, and we're over 500.
Big bite. Your first deal over 270 pads. That's fantastic. How'd you find that deal?
Well, so it was 270 pads. It was around 400 total units because we ended up buying 270 pads, an office building, 22 single family homes, 79 apartments. So it was there was a
Wow.
yeah, there was a whole hodgepodge of stuff that we, again, same thing. Like when we started getting deeper into what this gentleman was looking to do. I mean, it was obviously, it was a scary thought. I'm sitting here like, it was literally an office building. And I was like, I mean, it's the last thing on earth I want to buy. But, it was a matter of like, how can I, like, am I being compensated for the risk I'm taking? And it was, I got myself, comfortable with the risks based on, the overall price I was paying.
Yeah. And how'd you find that first deal? Because I mean, that's the hardest part for most operators is finding, a solid deal that pencils out. And especially with all these new, there's apartments, there's single family homes, there's an office. How'd you get comfortable with that?
So I was introduced by a broker. So a broker introduced me to the owner, and it was a situation where, again, the broker was very experienced and, very mature and very secure. And, he recognized, which I'm sure that you've come across many times, everyone's different. This gentleman who's, very much a mom and pop, owner, he would never have sold through a broker. Like, in his mind, like he would never, like, why would he pay the fees? He knew all about real estate, which is, again, to each their own. Obviously, I don't believe that, right? If I was going to sell something, I would use a broker for sure, right? There's like,
Same here, yeah.
I appreciate the value of a highly, skilled broker and what they could bring to me. And I would definitely do that, 10 out of 10 times. He felt differently. He felt like he knew better than anyone else, what his real estate was worth and why. And he didn't want to pay anyone any fees to, for him to, create that value or find it and then buyer. So this broker introduced me to him, said, let's say this works out, we'll figure it out type of thing. And, which I'm just so appreciative for. I mean, I'd never owned a mobile home park before. So, I mean, like, he very much, I think sort of, believed in the fact that I was going to, follow through with what I said. It's not like me and this guy, like, we didn't have a 10-year relationship, me and the broker. I'd known him for a few months. Now, again, we had invested in a deal together. So that probably helped with my credibility and my positioning. But he introduced us, and this gentleman, we established a relationship over months ago. I flew down and saw him during COVID. I flew down another time. To honestly, like, I didn't like this is I think a super important piece of this, and like to for anyone else that's going through this process, this was a gentleman that I still keep in touch with, still very friendly with, right? He is he's a very proud man. He built this, listen, he came from nothing, and he built a $10+ million business, right? Which is extraordinary what he did. He was very much the master of his, domain, which I think a lot of people are when they basically build a business with their bare hands, from the ground up. He told me as I got to know him, I was listening to what he was saying. And he told me cautionary tales of other people he had dealt with in real estate over the course of his life. And honestly, he just didn't want to be fucked around with. That may sound like odd, but he didn't want to,
and Craig, I think that's very common, from buying from mom and pops, they want to give it to somebody, right, that's going to be true and stick to their word. And then they also kind of have that grandson approach is kind of what I've seen is they want somebody to take care of the properties and they want to pass it along. And that's very important, right? When buying from mom and pops, making them feel comfortable. And it seems like that's what you did. You really built the relationship. It was more than the transaction, right? Is that what you're kind of getting at?
Yeah. Now I think there's, of course, everyone's different. And I think that so there are some, let's say, baby boomer type of owners that that we dealt with as well. It was super important to them, what was going to happen to the park. And we've we made them feel comfortable at that. This gentleman, I think was a little bit less worried about that, but I'm saying, but he wanted to, be, treated like the master of his domain. He didn't want me coming in there, trying to pull fast on him. So I literally, I did every single thing I said I was going to do. I didn't retrade one penny. I didn't come back to him, for allowances or trying to change the rules on him. And I feel pretty confident saying that if I did that, the deal wouldn't have gotten done.
You would
right?
kill the deal. Yeah.
Yes. So I
Let's
got
circle
myself
back
comfortable with
just because we're kind of getting
yeah,
off track. Let's
yeah.
circle back here. What do you think is the toughest hurdle to overcome in mobile home park investing?
Like as an operator, I think the operations is the toughest part by far. I'm not sure if you're asking that question from a maybe an investor's perspective, but from an operator's perspective, absolutely the day to day and keeping, especially as the portfolio grows, keeping your tenants happy day to day.
Yeah, and you said you're vertically integrated, so you guys have your own management company. Is that right?
That's right. We have our own property management company. We've
what does that look like? Yeah, how many team members and all that?
We have, I want to say, 13 team members now. I have a partner on the ground there who I think you spoke with, Kevin Murray. So he runs he's my partner, and he runs the business, and he's outstanding. I mean, I can't say enough for those of you who are considering going this path on your own, is that to find a partner like Kevin. Kevin makes the world go round, and even building the team alongside Kevin or under Kevin, he drives the whole mindset and attitude and culture of the business and what's made it successful. There's some folks on the team, like guys that on the maintenance team, people that work in the office, people that run sales and leasing. And, Kevin has the time that Kevin has spent, developing those people into great teammates that makes all the difference. Right. So, I think we're in a great place now, but that took really not even for me, that took a tremendous amount of really time, love, efforts on Kevin's part to groom all the people on the team and to really sell this vision, this culture, this family, and like what we're trying to build long term.
Yeah, no, that's super important. I was listening to a podcast this weekend actually, and it was a multifamily operator that got into mobile home parks. Right, was drinking the Kool-Aid, bought 9 parks all across the country. Right, from eastern to western to down in the south, and then realized how tough operations were. And they tried to use a third-party manager. That didn't work. They brought it in-house, realized they weren't good at management because they own like over $1 billion in apartments. And they brought it in-house to manage parks. And then they found an apartment management company that they were going to have manage it. They gave it to them. They still were messing it up. Mobile home park management is not the same as any other asset class. There's so many moving parts. I mean, what can you tell us about building your management company and maybe some mistakes that you guys have made?
Oh yes. So I mean, there's just I could go on for hours about mistakes we've made, all of which have made me more grateful that we're vertically integrated because it's not easy. And by the way, listen, anything that's worthwhile is not easy, right? So I would say that some of the mistakes that we have made, this is again something very specific to mobile home park owners, underestimating the difference between park-owned homes and like an apartment, as an example, right? So like understanding, sort of underestimating the costs, the time and effort to turn one over, the huge variance between like an apartment that's beat to hell and a mobile home that's beat to hell. Huge difference. You know what I mean? Like the fact, like, just even understanding, like never having experience and just understanding like the difference just in floors. The fact that mobile homes can literally have holes right down to the grass, and then you have to solve for that, right? I mean, so really understanding this is something that, again, I love this, but I mean, like, you have to kind of be like a little bit deranged to love this stuff. Like, so we have like 250 park-owned homes, right? So you can imagine like so the amount of like these mistakes. It wasn't like we had one park-owned home and I learned this. Like, we learned this through a huge fleet of park-owned homes, right? So
is that part of your model that you rent some of the homes out, or do you guys try to convert them to tenant-owned homes?
So we do both. I would say this is that I think that there's, and just listening to podcasts is interesting. A lot of people are like, no park-owned homes, don't like park-owned homes. Basically want to steer clear of them. But I think, listen, trust me, we understand. We understand exactly that's where we want to end up. But I also think there is a tremendous value in park-owned homes. I think they're basically undervalued in a lot of spots, and we've found that, and we've been able to monetize that. Like, what do I mean by that? I think that like just like everything else, during COVID and this inflationary period. Listen, the prices of used cars have gone up. I mean, so we have seen, we've seen things in our market, and our market is in the Winston-Salem MSA, and we have a lot of parks that are basically that are like almost equidistant from Charlotte and Winston-Salem. Is that part, like, let's say a generic 1993 3-bed 2-bath? I think a lot of people 2 years ago would have quoted that as like $8,000, $10,000. I mean, we're selling stuff like that for 25 in a lot of spots.
Cash?
22. No, rent to own. I mean, it's some cash, but a very small percentage.
And I think with the rent to owns, I'm seeing like what's your annual turnover rate on those?
Honestly, we've seen very, very little on the rent to owns. And that being said, that we've only been doing this for 15 months, right? So I'll check back in a year from now, and we'll see. But when you look at it as well, like and we've seen it because we ended up buying a portfolio of a variety of assets, right? Like stick built homes, double wides on brick, used mobile homes, whatever. And what we saw in the market occur, which I'm sure everyone's seen across America, right? These inflationary trends, like these stick built homes we bought that were honestly not that nice. We sold them. They were selling it at these at wild prices, right? When you start looking at a used park owned home for 20, 22, 25, that disparity gap between a stick built home and the used homes, widened so much that we saw again, a huge demand on these used park owned homes that I think that a lot of people would have quoted they were $8,000 or $10,000. We were selling them for 20 plus.
Yeah, and like from my experience with the park owned homes, you could sell them, and every market's a little bit different, right? Like I know Chris Rude, he's all about the park owned homes and renting them out for $1,500 a month, and getting that cash flow. And there's a ton of ways to make money inside of the niche, but just you could sell them for whatever price you want if the monthly payment suits them, right? Like you could sell it for 25 grand if the monthly payment's $400 a month. And that's not the problem. But the thing is like getting that pride of ownership from my perspective has been the struggle, right? Like we sell the home and then a year and a half in, something breaks, and they don't want to spend the $500, $600 to replace it. They're just going to abandon the home and then leave. And then we got to have that turnover cost. So, that's been the struggle for us. So we've actually, like, where we could have got 25 grand, we sell it to them for the 8 or 10 grand, because then they become an owner faster. And then they're willing to like spend the money on a new furnace if the furnace goes out. That's just my perspective. But I know there's a ton of ways to make money, but that's been our struggle. Park owned homes is there's like a 50% turnover rate, annually.
Yeah. Oh, wow. That's high. I mean, and I would be remiss if I spoke as though we had this figured out, because we don't. Right. I mean, we're still very much. I'm learning stuff too.
That's just what, and my parks are more in the Midwest, where Winston-Salem, obviously a really good market. I mean, that's fantastic. But if you can get, the bigger down payments, how much do you get on the rent to own for like a down payment on one of those?
Well, let's say on a $20,000 home, we don't take anything less than, 2,000. So let's say that the range is, I mean, that being said, we've sold a few cash. We've sold, a lot between, let's say 2,000 and 5,000. We use 21st on a lot of sales.
Nice.
Yeah. So we're
what a great program, by the way. The 21st. It's wonderful.
It's a great program. Yeah. And we're looking at, we're constantly really, Kevin does such a great job of, he's like, Kevin and I always like, talk about like, we want to constantly be learning and upgrading our business. Right. So like even on this front, this alone, just, selling used homes. Right. And we have, tons of park owned homes. There are just like, we want to continually be adding, arrows to our quiver. And as much as we love 21st, there are let's say segments of the buyer market that they don't serve as well. How can we solve for that? Right. Like, like Zippy is a company that we are now, really like, digging in with and trying to understand their programming, how that can fit into our business. Right. So it's a constant work in progress.
Yeah. Just learning new stuff. Tell me this. So you bought your first park June 2021, right?
Yes.
And now you're up over 500 pads. Has your investing strategy changed at all from when you first bought that portfolio to now? Do you look back and say, okay, we're no longer buying parks with private utilities, or hey, we're going to go with the park owned home route instead of the tenant owned home route? Like, has anything changed, and why?
Yes. So my change of view has to do with the market, right? So the market has changed in that short period of time. We closed on our first park 15 months ago. So we have, prices are much higher and lending costs are much higher. What's changed for us is that, in our, and what we've done is sort of our strategy has been target this very specific geographic area so we can build our core team there and then service all of our properties, right? So we're not trying to speak to owners in the Midwest, not because I don't love the Midwest and not because I wouldn't invest myself with someone with some other operator that I, trust and believe in like you, but like for our specific business, we think one of our advantages and core competencies is building out a team that is going to, service and operate our parks better than the competition. Right now, I wouldn't say we're there now, but that's our goal, right? That's where we want to be. We want to be the best operator in the entire, region, state, whatever that is. Like we want it to be very, very clear and a standout that when someone lives in one of our properties, that they don't want to leave, right? And they're basically they're telling their friends to come move in, right? So as we still target that area, I would love to buy, really basically any park that's in our geographic, sort of target zone. The only thing that's changed for me is how we approach that from a financing perspective. So we closed on a park, a 33 pad park. We closed on it maybe 3 weeks ago, seller financing. So we're trying to educate ourselves, and I'm spending a ton of time listening to Pace Morby and all these guys that really have a focus on seller financing. I read there's a great book out there by Bill Ham that's all about creative financing. But basically so we want to, so we are long-term believers in manufactured housing. We want to own these things for decades. So we're always going to be buyers. It's just a matter of how do we make the numbers work for us? And yes, paying yesterday's prices with today's interest rates, it's much harder to make it pencil. I'm sure you're seeing deals all the time, as am I, that when it comes across your desk, you say, wow, this park looks great. And, at this price, at 6%, this just doesn't work. Yes, listen, if I had unlimited capital and, I could buy it for cash and, spend the time and whatever, I'm sure that I would be pursuing more of these opportunities. That's not my situation. So again, this is my personal capital. So, my considerations are different than, private equity firms or people whose cost of capital is, 3% or something. So, we're just trying to be the best, sort of real estate problem solvers that we can be. And in this environment, to me, that means having more levers to pull on the financing side and understanding creative financing better.
Yeah. And that's Creative Cash is the name of that book.
That's the one.
And so, yeah, that's awesome. So 33 pads, I've noticed that, the same amount of work goes into a 33 pad park that goes into a 75 lot park. So, and you've bought, a huge portfolio with the 270 pads. So what's the idea there? You mentioned the scalability and how important that is. What's the idea with buying smaller parks? Are you getting better deals there? What's the thought process behind that?
Yeah. So it's interesting. And I thought this a lot because those smaller parks are, what we did is that we, again, this was, I wish I could say this is all, we were sitting here crafting the strategy. A lot of these things are just sort of how the ball bounces. We were fortunate enough to meet this owner, build a rapport with him. And, he had enough assets in one place, for us to establish a beachhead. Right. And then we built off of that. How do we build off of that? We had this, we had enough revenue from this original portfolio to start building out a team. Again, the most important thing that our business ever did was, basically have enough money to invest in Kevin, right? Kevin's my, partner. He was able to leave his full-time job and dive headfirst into this. That's, that's the best thing we ever did, right? Now, how do these small parks, why are we buying those? Is because, we have enough of a nucleus in this one geographic location that now we can, if we can go after a 21 pad park, a 36 pad park, a 73 pad park, which are all real life examples, we were able to go to them and say, Kevin was able to go to them and say, hi, Mrs. Smith, we are in town. We have, the name of our company is 40 Oaks. We have bought this portfolio from this gentleman. This is what we're trying to do here. This is the vision for our business. If you want to sell your park, like, we're the best buyer for you. And we even have a list of references of other local owners that we can give you. If you want to call them and ask them, they'll attest the fact that we are going to basically make this, as easy as possible on you, right? So we have been able to, one, get, excellent deals on these smaller parks. And
it helps having them close by, when they're all right there. That's also with the park owned homes. You probably have one rehab crew, right? That works for you, goes to all your homes, does the same model. So yeah, that definitely makes more sense. If you got a cluster in the same area. So
yeah, I wouldn't necessarily suggest, like, again, if you told me that you have one park, hey, Craig, there's a deal. It's 4 hours away. It's a 50-pad park with 40 park-owned homes. I wouldn't be interested. If you told me that was like in our sort of geographical area, I mean, almost undoubtedly, I'd be the best buyer for that. And again, it has to do with, like, again, where's our talent pool, right? Our talent pool is in this area, Davidson County, outside Winston-Salem, and so I feel very comfortable we can execute well on anything. Again, say 20 pads and greater, in the fact that everyone. I mean, this is something that there are not institutional players are not going the 20 to 50 pad parks. No one is going after those the way that we are in that geographic area.
That's another good point right there. Less competition. You're going after these, and you're finding yields that it's just not efficient for private equity to go down that low. Tell me this: what are the most important things passive investors? We're talking LPs here. What do they need to know and look out for when investing into mobile home parks based on your time in the space?
Yes, so I'd say there are, from a high level, the two biggest things are market and whether you want to call it the operator, sponsor, syndicated, whatever it is. Like in this example, right? So it's like, so I think understanding, there's a line that there's a show on CNBC. Jim Cramer is like a famous stock picker, and he has a line that he says all the time where there's always a bull market somewhere, right? So there are, despite all the headwinds that we're facing in the industry and the world and whatnot now, right? There are cities and counties and states all over America that are creating their own bull markets, right? That are basically doing things like creating new jobs and doing sort of making moves that are attracting people to where they live, right? So I mean, so they are creating their sort of own personal tailwinds, right, in these specific markets, right? Which that counts for a ton, especially when you start getting into a market like now, it's maybe going sideways, maybe going down, right? Having that wind at your back in these different micro environments is a huge deal. And I'm sure that there are a lot of people that as the market was just sort of on fire for years and years and years, started picking up different tertiary markets and even maybe beyond that, and said, hey, is a rising tide sort of forever? And it's not the case, right? So I think that especially in a market like now, that these making sure that you are in solid markets for for the long term. I read some stat on Charlotte that says they expect Mecklenburg County to double in the next 10 years or something crazy. So I mean, having that that wind at your back is a huge deal. Secondly is the operator, right? So in this example, the person you're investing in, you are very much investing in the words they're saying. What are they saying that they're going to do? Are they going to stand by that, right? Are they going to communicate well? Are they what's their, do they have credibility? Are they going to follow through everything you're saying? So, those are the two main elements. And then if you start drilling down on the operator, right? So in this example, you of course, investing in your fund, I think you really have to think about what is the Keel team? What is their success predicated upon, right? Is it predicated upon, rental rates in Charlotte going up 20% a year for the next 7 years? If that's the case, that's, unfortunately that's out of your control, right? So it's is Andrew and his team, is your success predicated on things that are in your control, right? The operations and, things like that. Do you have a huge CapEx program? If that's the case, is that something you're experienced in? can you execute upon, what you are selling, right? So again, I think it's sort of a huge piece of it. I mean, you're really investing in the leader of any team, and believing in them. And I mean, the ones that the funds or opportunities I've invested in away from my own, I've had the basically almost pretty much blind faith in the operator that I'm investing in.
Yeah, the jockey matters most, right? Yeah,
that's right.
That's great feedback. The market, the operator, I love that. That's been a recurring theme. Is the operator and their track record. I have a quick question for you. So, how has your your day job, right? Your fintech, that's where you're at. How has that, what have you learned or what have you brought from that into your manufactured housing business, your portfolio and management company?
Yeah, I mean, I think that I think sort of like broadly, right? Is it like you're learning things, you're learning different things from different experiences, right? So,
Sure.
I was, before I was in fintech, I was a fixed income trader. So I think that I see that in my decision making constantly in the manufactured housing business, because that I was basically making decisions on the fly just constantly all day long, right? So like I think people talk about in the business like analysis paralysis, and I don't suffer from that because I overcame that. I had it at some point, and in that job I had to overcome that quickly, because the part of the job was like making risk decisions on the fly constantly throughout the day. I think that when I look at my W-2 career, the biggest takeaway is the risk taking piece. I'm actually reading Sam Zell's book right now, and he talks a ton in the book about about evaluating risk, right? And and basically wanting the deck stacked in your favor, and how are you how are you evaluating risk? How are you calculating the risk reward of different scenarios? And I think that is not that I'm by any means an expert, and of course I have a ton to learn, but I think that is the biggest takeaway from my W-2 experience. What I brought into manufactured housing is the ability to make decisions quickly, to sort of synthesize information, make decisions, and the ability to take, I think, sort of well calculated risk.
Love that. Yeah, that's awesome. How could listeners get a hold of you, Craig, if they'd like to do so?
Sure. My email is Craig, CRAIG, at 40 Oaks 40OAKS.com.
Awesome. Well, I'm really thankful that you came on the show today. Thanks for coming in and dropping some golden nuggets.
Thanks for having me.
Yeah, if you had one more tip for investors out there, just like what you could glean to our listeners on mobile home parks, what would that one final tip be?
I think it's the best space. I'm putting my money where my mouth is. My family has, we have the majority of our net worth in manufactured housing, right? So I'm a huge believer in that, as an investment, and then sort of on a personal level. I know you only asked for one thing, but my second thing would say, on a personal level, is that is just to take action. It's so easy to make excuses. I mean, I have a 10-month-old. I have a pretty demanding job. I have all sorts of shit going on, as everyone does. So of course you can make excuses and not do things. But if you want to get into manufactured housing, whether it's through properly vetting an operator like Andrew, or doing it on your own, whatever it may be, just to start today, and start even the smallest ways. Listening to Andrew's podcast, a great start. And just allow yourself to build momentum, because there's never a perfect time. Everyone's busy. There's anyone can make excuses. Just start taking action.
Awesome, Craig. Thanks again for coming on.
Thanks for having me.
All right, that's it for today, folks. Thank you so much for tuning in.
Would you like to see mobile home park value add projects in progress? If so, follow us on Instagram at Passive MHP Investing for photos and awesome videos from our recent mobile home park acquisitions. Once again, that's at Passive MHP Investing on Instagram. See you there.